Today we are very pleased to have Mr. Chen Fan Fai, Director of Investments from Kenanga Investors Berhad, to join us and share with us in regard to Kenanga Sharia Growth Fund. Mr. Chen, how would you describe your investment philosophy or style of your funds? Would it be top-down or bottom-up approach?
In general, we are basically a bottom-up fundamentalist, and we actually look at companies like any other businessman. We'll look at the business model, look at what's their competitive edge that they have or they don't have. We'll look at the quality of the management and all that. So only when we are happy with all this, from this business analysis perspective, then we'll move on to the next stage, where we look at the study of financial analysis of the company, right, to see whether their performances, the past performances, is it justified, and then also try to project forward.
What would you say is the main strength or maybe weaknesses of your team managing this fund?
Main strength of my team. See, my team actually is, I would say, a relatively young team. They're only about 5 years old. Okay. But the good part about it is, thing about it is that we all subscribe to the same investment philosophy and investment process, and we all follow through. So in that sense, there will be very little style drift in that sense.
Okay. Next, I think a lot of people will be interested in this. What's your outlook on the market, and how would you go about with this market conditions?
You talk about Malaysian market.
Malaysian market.
Okay. If you look at the Malaysian market now, in terms of valuation, they are quite fair, right? And earnings, at least this year, is still expected to grow for this year, with a high single to low double digit. And given that the valuation is still fair, market should actually, markets and the share prices and all that should actually track the earnings growth. Right? That is if everything stays status quo. But honestly, right now, we do face a lot of external headwinds. I think it's well publicized already in the newspaper, television, what's happening in Europe, US, China. So that may actually cause some downward revision in terms of earnings, right? But having even said that, I think that Malaysia, even with factoring all that in, going forward into next year, we still can reasonably expect earnings to grow 5-10% quite comfortably.
What sectors do you like? Which sectors do you overweight or underweight? Would you avoid?
So far, for the last 2 over years at least, we have always liked the consumer space. Consumer could be in terms of drinks. For example, some of our favorite holdings are like Dutch Lady and Nestle. Other areas in terms of the consumer space would be like healthcare, which we hold like KPK healthcare, and also some others like utilities, in the sense of we like all the telecommunications space, the telcos. In terms of sectors that we have, how should I say, consciously avoided, are those more towards geared towards the export sectors, whereby the end product actually will end up in developed economies, because we think that those businesses are vulnerable to slow down the economy.
That's very interesting. Right, I think we are running short of time. I'll just give you one last question. What's your view on the minimum wage policy implemented by Malaysia, and how would it affect our plantation sector in Malaysia?
Obviously, it's good for the workers.
Yeah.
No, I mean, there will be, of course, businesses, there will be an adjustment phase. Obviously, this will, in the short term, lead to some adjustment in terms of the cost side. Right?
Alright.
But if you look longer than the medium to longer term, it's a positive factor in the sense that it will spur the industry to be more efficient and move up the scale.
Alright, with that, I'd like to thank Mr. Chen Fan Fai for sharing with us regarding his outlook as well as Kenanga Growth Sharia Fund. With that, I end the session. Thank you.